The emissions cost will weigh heavy on the scope of the Australian banks. Carbon is as unique as it is complex. No wonder the financial world has struggled to integrate it. As a systemic risk, it demands a solution with a strong basis in science and finance. I'm Sage for Kalkine Media. Please subscribe to the channel. A month back, the Commonwealth Bank unveiled its climate report. Even though the bank highlighted its keen commitment to cutting down emissions, a report published in the Australian Financial Review highlights how it is burdened with the possibility of liabilities worth $6 billion. The Commonwealth Bank disclosed its Scope 3 emissions in this climate report for the first time. Scope 3 emissions measure its customers' financed emissions. Now, as brought to light in AFR's report by a climate data specialist, EMI, the estimates were 2,300 times higher than the bank's direct Scope 1 emissions. EMI also noted that CBA's Scope 3 figure of 24.4 million tonnes of carbon dioxide was 2,300 times higher than its Scope 1 direct emissions. The bank has made its latest disclosures under the Partnership for Carbon Accounting Financial Standard. The estimates as put forward by EMI also suggest that CBA faces potential costs of 4% of its market capitalisation by 2030 and 33% of it by 2050 if strong action is aimed against it to limit global post-industrial temperature increases to 1.5 degrees Celsius. But CBA isn't the only ASX bank that's having trouble on its way. Using CBA's baseline data, EMI believes that Australia and New Zealand Bank Group Limited, National Australia Bank Limited and Westpac Banking Corp could be in the same cesspool of trouble. If Scope 3 emissions are counted, EMI noted that CBA and the big ASX banks could be in the top 15 worst emitters on the ASX. If the regulators decide to lay the cost on them, the banks ought to land in deep financial troubles. And recently, ASIC Deputy Chair Karen Chester has encouraged company directors to utilise its information sheet aimed at helping issuers avoid greenwashing. For companies that have set a sustainability target, ASIC said what the target is, how and when it is expected to be achieved, how progress will be measured, and any assumptions that were relied on when setting the target or measuring progress should all be clearly explained. The Australian fintech EMI previously found that over 30% of the value of the ASX 300 could be at risk by 2030 due to the carbon transition, equivalent to around $480 billion. Thank you for joining us. Now, if you like this information, please give it a like, share it, comment on the video below, subscribe to the channel. And if you press the bell icon, you'll be notified every time Kalkine releases a new video. But for more information, head to the website. It's kalkinemedia.com. This is Sage for Kalkine Media.